Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, February 22nd, 2023. It's 9:48 a.m. Eastern Time as I'm starting the video, and I'll do it quick. I'm gonna rifle through these charts. I'm gonna cover the indexes, the stock market, gold, silver, and the miners. I want to talk on. I think there's an opportunity there. We're getting close to buy signal. I started today, just right before this video, starting to scale back into the gold miners. Already had the metals from recently, so but GDX I'll get to in a second, and some of the individual miners, and just checked on, went back and looked at a couple of the recent posts, comment section. Boy, a lot of interest in natural gas, so worth definitely covering that one. And I think that'll be it. Let's just keep it to that. Otherwise, it'll be one of those 45-minute videos, and that's not what I want to do today, especially early in the morning. I want to get this out to you guys. So most importantly on the indexes, well, I got that out to you today. I don't want to beat a dead horse, but there it is. That's a big level. Color-coded it up about 294 on QQQ. Remember, it was pretty much this whole, you can see for months now, we had multiple failures. It was support back here. It was resistance all throughout here. You broke above it. Once you broke above that resistance for several months or a month or more, you had a nice rally. Came and back tested it. The buyer stepped in, and it just helps to validate it. The more reaction points, and then back here, it capped all advances back in November and December, and then finally we just broke out. And we're back testing it. So whether it holds or not, that's yet to be seen. But as I said, it's not only that. You also have the 200-day simple. Here, I'll turn off all my lines. You can see the red line is the blue line's a simple right here, 200-day simple moving average, and then there's the 200 exponential. And these lines collectively, one or the other, they tend to do pretty darn good job of defining bull and bear, primary bull and bear trends. In other words, in bear markets, you're below them, rallies back to them like right here and right here. You often get rejected, and then when you take them out and you're above them, they act as support. Now, I still lean to the camp that they're going to get taken out, and to me it's so, there's no guarantees, but it's a matter of will it be sooner or later. This could be, and I suspect it'll be a false breakout, and we could just go right on through there. So I like to say, especially in a bear market, stay flexible, stay nimble, don't be married to any one bias. You also took out the I should say the uptrend lines. So as I said, recently we had a confluence, or not a confluence, a flurry, if you will, of sell signals. You had breakdowns of the primary trend lines. You had rallies into resistance, back tests of the trend line there. So it's a matter of, are we going to bounce first or not? And we could bounce all the way up and still, at this point, I think I said it yesterday, the odds for that marginal new high scenario, which has the indexes, the Nasdaq and the S&P going up and taking out these highs by a slight amount, relatively, anywhere from 1 to 3%, somewhere in that range, put to give us a divergent high. That's still on the table, although a little bit less, I think. And remember, the nature of bear markets, quite often, not always, but quite often, after these rallies, you get a pretty strong reversal, and they just don't let the shorts in. They don't let the longs out. So whatever, gave you my thoughts today. I'm looking for just a very near-term bounce. Made that case based on these pullbacks to support. Yes, we had the recent bearish PPO crossovers. Those have usually been trend change indicators before, but sometimes you get them, like you had one right here, and that was where the crossover was, where I took that line up to, and you had the initial drop right there. I'm trying to use my arrow tool, but it didn't work. Then you had a little head fake right there to burn those shorts that jumped in too aggressively there, and give you that one more thrust up. Probably suck in the last of the longs, blow out the weak-handed shorts. I don't mean that offensively. I'm just talking metaphorically. Those are, well, whatever. I think the term describes itself, and that gives you the usually sets the stage for the bigger drop. So very much open to that still, and I'm kind of taking it day by day. That's what I usually do. So what I say today, tomorrow, I may change my mind. As of now, we were down pretty good in the last couple days at support, both in proximity to the 200-day moving averages and the price support there, 294. And then I gave you on the futures, at least, I gave it to you here. Let me show you that. the potential little bullish falling wedge pattern. This is our primary uptrend line off the January lows right here on the 60-minute chart of the futures. Broke down, back tested it, got rejected, but that's set up from this point there. You have a pretty well-defined downtrend line, and then this is our divergence line, and that together forms a bullish falling wedge pattern, and you have a positive divergence there on the 60. Now what you don't have yet is a breakout, so that would be your buy signal. And there's two ways to objectively go long, either on a pullback to support, which is what we hit, and that's also what I just showed you on the daily, and that's that level I covered in yesterday's video. It was our next support level, 12057-ish right there. And so we're at support, so that makes the case for an objective long entry number one, with a second buy signal or add-on to come on a break of the wedge pattern there. S&P 500, there's ES. ES or the futures, they're still a hair above that uptrend line on the 60-minute chart I've been targeting for this drop. And I can easily see that. That would give us one more thrust down. I'm going to measure it for you right now. And for my own sake, it's only about 1%, little over that. So we could get a little washout moved, and that would probably come today, would be my guess. And if we get it, so I'm just trying to quantify it, it's one that most traders could ride out a 1% drop and then have a stop somewhat below. That would give us divergence on the 60-minute chart of ES, because we don't have it. We made a slightly lower low there on both the RSI and the PPO down here. So so to me, it's a matter of, do we have a little more downside and then probably get a counter trend bounce, maybe hit the on that daily chart, go down and hit the 200-day simple on QQQ, which we didn't get to yet. We're just below the 200 exponential. And then on SPY, there's the uptrend line I gave you this morning. We were at it in pre-market, so that was actually your buy point. So we were a little lower in the pre-market session. Those lines are off now. They had the white candles going down to there. We had a little pop since then, and you can see there it is. The let me make it a little bit thicker so it stands out. That's our uptrend line off the. That's the primary trend line off the October lows. The one I showed you on NQ was off the January lows. So this is when, so far, this is at this point in time, the official low point of the bear market, and only only time will tell if it was the end. I don't think it is the end of the bear market. I think it's just a major low. But what you can't argue about is this is a pretty well-defined trend line, especially if we get another reaction here, because now you'll have, this first one there, second one. It really takes that third reaction to help define it, and then that'll be an important level to watch, and a level that I think will ultimately go. So that's what I'm looking at. And those are the arrows I gave you this morning. Looking to trade a little bounce here, and then position short at the right time, which I think I also showed you on the 60-minute chart, a little downtrend line off the highs. That would be one potential. There it is, one potential and likely target. So what is that going to give us? About 3% upside, and that would be in line with a 3-to-1 RR, which is an attractive risk-reward ratio. If you're actively trading, make quick 3%, you risk a down percent or so on the downside. And on IWM, remember that we have this uptrend line right here. This is a 60-minute chart. Let me just jump over to the daily and show you the it's a busy chart, lots there. But this trend line here, this purple trend line that goes all the way back to this March high right here. Another second very clear, distinct reaction in August, and we broke above it here, and we're back testing. And there's also that very good price support level, former resistance around 189, give or take. And so there's a case that we could bounce. Now again, we've had some check marks on the more in this very significant daily time frame, overbought reading in a bear market that usually caps the bear market rally. So like I said, this is a kind of a picking up nickels in front of a steamroller trade is what I'm viewing it as. So what I've said yesterday and what I've been saying for the last week or so, if you're a swing or trend trader, not very active trader, I don't see any reason why to cover shorts right now. Of course, have your stops wherever they are, depending on your entry point. Active traders might want to try to pick up a few nickels in front of the steamroller here on a bounce. or not. And again, I also trade different accounts, long-term accounts and short-term accounts. So short-term accounts, active trading account, and that's the one I'll try to game these little, what I call micro squiggles, if you will, the little zigs and zags on the shorter-term charts. And last but not least, RTY are the Russell 2000 futures. You have, this is our primary uptrend line right here, coming off the September lows right there. But here's a little minor trend line that we just hit. You have a few reactions here. I'd like to see it a little better defined, but so far we do have a reaction off it, and just like the S&P 500, there's a nice little downtrend line there to target if we do get this bounce. All right, next up, told you gold, silver, the US dollar. We'll start with the dollar index, USDO LR. I haven't even pulled that chart in a while. I was going to show you the euro. US, let me try it again. DO. Okay, unless I've gone crazy here, I think TC 2000 has 86, the dollar index for some reason. It was USDLR. I typed US dollar. And I don't see the dollar index, but that's all right. I usually use the euro US dollar pair, and that one will show you we're still on that 106 100 support right here, this line, and I still maintain a target of this uptrend line. It's a matter of we're going to bounce first to get a little bit of a downtrend line here. I'm going to show you on the 60. So I'm favoring a bounce and then get down there, but we could punch on down there, and that's why to me it's not a hard all in on the metals yet. But it is time, especially on GDX, to start scaling in. Maybe nothing heavy positions I can add to, and this is what it looks like on the 60-minute chart right here. Not much change from last week or whenever I updated. We had a divergent low here on the 60-minute chart, and you still do, and there's that little minor trend line. So if we pop that, we get a little rally, and then most likely one more leg down to hit that trend line, that target. We don't have to hit my pullback target, but I suspect that we will based on the divergences and everything else, my read on the charts. And therefore, if and when we get there, that'll be a all-in moment. And the fact that we may not hit it, that's why, personally, I'm starting to take back all the miners I closed out. And we sidestepped a good one there, whether you shorted it and profited, but GDX was a short trade idea. We had a breakdown. It was a beautiful setup too. Bearish rising wedge pattern, nice clean uptrend line, breakdown, back test if you missed the breakdown to give you an objective entry. Went on, hit my first target there, hit my second target there, and like I said, I closed out the short because the RR wasn't favorable any longer. I closed out a hair above it actually, but then mentioned if you were still in it and you held it to that T2 2850-ish, 2847, that the RR is not very good. So here's what I'm looking at. You have a downtrend line right here, a very well-defined downtrend line in which to trigger a long entry, but you're also at support 2744, and then my max pullback target. We could get there, but again, I don't think the RR is that favorable. Again, you can ride it down if you want. I told you, trail a stop if you want. We may get down to that 26-ish level. And if the charts confirm, it'd be a great buy point for GDX, more of a hard in, especially if the charts confirm. That means full position instead of a scale in. Right now, I'm just kind of looking to scale in. Either we're gonna break out soon and rally and maybe on going up to the next targets I have higher up, resume the bull market, or maybe a little more downside or a little consolidation. I don't know. That's why I scale in. When I know, or I shouldn't say when I know, when I have a high degree of confidence, I do a hard entry. That means a full position, a breakout of something, a well-defined pattern. But when I'm kind of unsure, but just trying to call an inflection point or a turn, top or a bottom, that's when I'll usually scale in. But let me show you the miners themselves. Newmont, I'm going through the holdings of GDX here, and I'm doing it in descending order of market cap. So this is going to have the biggest impact. That's good support right there, about $45. It was support here. It was resistance, broke out and successfully back tested. Resistance, once broken, becomes support, and you're back down to there. So great support level, and this is one, One reason, or you can take this as an individual trade idea. So if you heeded the warnings, you got out here, there was a trend line break, you sidestepped a 16% give back on your long position, or you profited from that short, and that's what swing trading is all about. Go long here, short there, long for the next ride up, and in a 50% move in Newmont from bottom to top, you can actually do 80% or more return by sidestepping or profiting from the counter trend moves. So there's Newmont at support, oversold. If it is a bull market for Newmont, this is when you want to buy, when you see oversold down here, because in a bull market, in a bear market, oversold tends to become more oversold or stay oversold for an extended period of time like it did down here. In a bull market, it's usually a one and done tag. Let me just show you the rest real quick. So they're not all at support. FNV, but getting close. Took out that 132.90, but here's my next support right around 126.36. Coming up on that, not too far away, about another 2% downside to that level there. AAM right at good support. So again, this is how I process things. I always use that analogy of a prosecution for a criminal case. The prosecution needs to build up a case, and and if they have enough evidence, they're going to get a conviction. If the case is weak, they don't get a conviction. So if I can make a case here on one after another, and you maybe not get all these stocks a hard buy signal or all at support, but when I see the majority of, especially the top components at GDX, all falling to support around the same time, especially after a big drop like this, that's my time that I like to step in and buy. And again, it's building a case. So there's a check mark. AEM at good support. WPM not there yet, 38. And seems like a lot of these, Wheaton is, I believe, more of a silver miner. It is in the GDX and labeled here as a gold mining stock, but it's so the silvers look like some of them have a little more downside, but again, you have a lot hitting support. Maybe the buyers are going to step in. RGLD, Royal Gold, is just a hair below that 120.84 support. Again, this would be, if it continues lower, if the miners continue lower, these are the next buy points, these next support levels. TGX, nope, that one's not. AUY, again, it's down hard. Miners have been falling about 16%. I could add a support level here, and I'll do it right now because I see a reaction high there. I see reactions there. So coming up on support. KGC, Kinross Gold, certainly at support, right at uptrend line support. All right, and that's it. I can go over and over and over, and some aren't at support, but a lot are. And again, not a hard entry in my opinion, but certainly a good time to maybe, if you're still holding the short trade, take some profits, or like I said before, lower stops. That's two options. When you're in a catch a trend in something, don't underestimate the trends in the mining stocks. It's just like natural gas, which I'll get to in a minute. And so these things can just go and go and go, and sometimes that's what they do. So by periodically lowering or ratcheting down your stops, or you can set a trailing stop loss order that will automatically do that for you. You're just going to have to, I always say, know your security. These miners can move easily double digits, high single digits to double digits in a single day. So if you're running a 1% stop loss order on any of these, you're probably going to get clipped out, even if you're right on the call, but just in the day-to-day grind. So again, just keep that in mind, that you need to set stops commensurate with the volatility of the position that you're trading, and also in line with your RR, your risk-reward that you're targeting, your risk-reward ratio. All right, enough on the miners. Check. Oh yeah, the metals, of course. Gold and silver. Let me just show you the futures. This video is going a little bit longer than I wanted to. So there's silver. I mentioned this one last week. Bullish falling wedge pattern right there. Positive divergence on the 60. Breakout back test. Walking its way up. Close enough, just a little shy of that 22-ish level, but close enough to consider it hit. I always say take profits a little shy of the actual resistance level, but based on, if we get that little pop up in the a little rally in the euro and drop in the dollar, you could get one more thrust up, and that is still the next target there, 22.6. If we get a scenario where the dollar is going to, the euro is going to have another leg down, hit that primary swing target I gave you, then we'll probably get one last flush out move in the metals, and that's where I'll be looking to buy either add on if I wrote it out or re-entry depending on what happens. That's silver. And then that's, by the way, a 60-minute chart, 3-month price history, hourly candlesticks. And let me give you gold, GC, gold futures. I've got you somewhere here. Let's see. There it is. All right, same thing. Of course, you had that primary uptrend line, which was one, helped us get out of gold. Then bearish rising wedge, little whipsaw I mentioned there, but then when we went up, extended the divergent high right here, so you had negative divergence, then you had the breakdown, the real deal that it stuck, then you took out that support level, impulsive selling, little flagging action, consolidation, move down, but again, gold is in a larger bull trend, and so I don't try to get too greedy on my short trades, my counter trend trades in a primary bull trend. In a bear market, yeah, I'm going to let those shorts run. I'm going to go for the longer targets. But in a bull trend, yeah, you got to not stay too late to the party when you're shorting. That's the key. And so there it is. Bullish falling wedge, positive divergence, breakout. It's not really going far, but it needs to take out the top of that range. I have it about 853, 855. If it pops that, it should run. If we get that whole scenario where the euro is going to take another leg down, the dollar one more thrust up, hit that pullback target, that longer swing target I gave you on the euro US dollar pair, then you get probably one more final washout move down here, limited downside in my opinion in gold, and that may still just give us even bigger divergent low. So again, it's a scale in time for me. Okay, and the crowd favorite, or actually the most hated security right now, probably on the site, UNG, natural gas. So in my last update, I highlighted this trading range right here. So I highlighted a couple things. I said, well, yes, we had a buy signal, we had a breakout. It was a well-defined downtrend line, and we broke out right there. That was February 7th. And then what happened, and I covered this in the last update, we started to consolidate. Let me try to use a box tool here and color it up properly so you can see it, and said that we had this trading range and we'd need to take the top of it. It was about 891 to get the next buy signal. So we consolidated, actually the trading range extended, and then we broke to the downside of it. So no breakout, no additional buy signal, no additional confirmation. The downtrend remained. Looks like we're still green on the histogram. It looks like it would cross if we go down anymore, but the histogram is still green. I've gone over this. These are your trends, your major trends. That was a little whipsaw there. But you can say either way, you can just follow this almost mechanically, and you can see that when it's red, the trend is bearish. When it's green, the trend is bullish. It's been a long, what I call hill, big red hill, where you have this upside down inverted mountain on the histogram, and that defined most of that trend. But we've now crossed green, and usually always when you cross green, it doesn't mean you're going to rock it, but the trend is bullish. And then moved up from there, from the crossover, and there was your bearish crossover. There was a bullish crossover right there, and it came a little after the bottom, but there was plenty of meat on that trade. So the bull case would have us holding these the bullish crossover on the histogram. Again, that's these lines here it's showing, and move up. And so I still maintain the RR, despite the resiliency of this downtrend, is very attractive. This is natural gas. The natural gas futures are selling. They dipped below $2 briefly today, but they rocketed up afterwards. And again, it's natural gas. There was going to be, yes, seasonality is not there right now, but there are other forces in play, including but not limited to a lot of utility companies will switch to natural gas from whatever else they're burning. it's coal or whatever other source. They're going to buy it on the cheap now, and you're going to have most likely a big short squeeze coming up. So 60-minute chart, there was that little range, remember, and that's it. So it's about $9. We need to pop that. We still have the same divergence that was in place. You have a bullish PPO crossover right here. So yeah, it's I think it best case scenario, or I'm sorry, worst case scenario, we're at or very near a floor. I mean, natural gas isn't going to go to zero. That's just not going to happen. It's extremely unlikely. I know crude went negative briefly in COVID. That was kind of a different story due to the futures and storage issues. In a sudden, abrupt, supply demand change or shift when with the economy shutting down. But anywho, those are your levels to watch, guys. Still needs to take $9 and can run. And futures, the March are about to end. March started to roll this week. It'll stop trading. So I've put up a chart of the Aprils here. There's a little downtrend line that's popped. This is that big level right here. This is that same trading range I showed you on UNG, but on the April contracts. And so the bottom will be resistance, and probably get a little reaction there. And if it can get into there, then it's going to run up, challenge the top of that level, which is, I have a rough line. Let me put it closer. I'm going to leave it there, right about 270. That's a level that really needs to pop to run. All right, let's wrap it up here. I'll get the video out to you, and if anything big happens today, I'll do another video or any other trade ideas. Oh, the one thing I keep mentioning, I've been highlighting it like crazy before, and just to not forget about it. Remember, this is big to me, very big, and it speaks to what the market may do. This is the VIX. So not only did we have those bearish PPO crossovers on all the indexes on the daily. Let me park the PPO histogram here. SPY, QQQ, IWM, and those were trend change signals that help confirm. But you also had the breakout and the back test in the VIX. Remember, that's these purple lines. There's a bullish falling wedge pattern, and that's pretty powerful stuff. And in the past, when you get a breakout in the VIX, break above these downtrend lines, those are usually when your next corrections, or legs down, I should say, in the bear market begin. And so sometimes you just rock it and don't look back, but quite often you can see after the breakout there's a little area of consolidation. Remember, we had a little false breakout here, a breakout that never panned out, but I pointed out that you usually get an initial surge, a little kickback in the VIX, a little kickback, and then you rock it up. And so that's when I say threading the needle in that, on equity longs right now. That's what I'm looking at. So maybe we broke out, back tested, and maybe get one more thrust up, pullback in the VIX, I should say, with a rally in the stock market today, maybe into tomorrow, and then boom, that could very well come. If this comes, that's going to be a pretty coincide with a pretty powerful drop in the stock market that will probably take us back below the 200-day moving averages, below the key support levels that we recently broke out of, the downtrend lines, the primary downtrend lines off the highs, and all that other stuff there. So keep that in mind, and that's why I said, swing trend traders, there's a lot of check marks we have recently to be short, but right now, not me. I wouldn't be taking new shorts or adding, because we're already, we gained a good part of this pullback so far, and maybe there's more to come, but like I said, too much support to, that's TA 101. You buy. I like to short breakdowns of support or rallies back into resistance. So there was one, the breakdown of the trend line. There was two, the back test of it. And then I like to cover on support or wait for support to break to add to those positions. But right now we're at support, so there's a good chance you're going to have the individuals and the algos and the everything else buy these this range of support right here. All right, I'm going to stop it here, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.